Good morning and Happy New Year. Thank you for joining us for our second episode of Reuveni Reel Talk. This is our bi-monthly video supplement to our Reuveni in real time weekly report. For those of you who are not familiar with our reports, I urge you to look us up and subscribe. Our weekly reports are a summary of all new transactions in Manhattan up to 125th Street. We track and compare each week's data with the week of March 9th to the 16th, which we consider to be the last normal week of business pre-COVID-19. We also make a comparison with the same week last year. Our data is carefully collected and dissected daily. We do not rely on hearsay in our reporting. Rather, to assure accuracy, we use information from two reliable sources to verify each entry and transaction. We are a privately held real estate company. Our data is unbiased. It is prepared and presented solely for the purpose of providing true in real-time information to our industry, brokers and colleagues, to our clients, and to their capital partners. Our bi-monthly Real Talk video sessions are scheduled to last 20 minutes. Do forgive us if our enthusiasm carries us a bit longer. It would obviously be impossible to cover every aspect of the market within this limited time, so we focus on the most notable transactions and trends within a given 2-week period. Today, due to the end of the year holiday lag, we will be covering the past 3 weeks instead of our normal 2-week coverage. With me is TJ Quinn, a Director of New Developments and Research. TJ generates our reports and is involved with pre-development, design, and management of our projects. TJ literally breathes and lives this stuff. I encourage you to pay special attention to his pearls of wisdom. So let's get to it. These past 3 weeks had nearly 500 new contracts signed in Manhattan, with over 900 million in sales volume. This sales volume certainly sounds impressive given COVID-19 market conditions and end-of-year holiday season. TJ, given the past 3 weeks were over the holiday, over Christmas and New Year's holiday season, a traditionally quiet time of the year for real estate transactions, how do you compare the same time last year and with the last normal pre-COVID week in March of 2020?
Yeah, so first of all, Shlomi, thank you for the intro and Happy New Year, everybody. So 3 weeks ago, the second to last week of 2020 was a strong week, 196 transactions, a little more than $300 million in dollar volume, roughly flat year over year, and pretty close to the beginning of COVID in terms of number of transactions. Year over year, there was a big difference in dollar volume, though, about 30% less this year. That same week in 2019, there was close to $450 million in dollar volume. Interesting, though, that in that week in 2019, there were 2 trades at Time Warner Center that between the two were about $55–60 million alone. So if you do back those 2 out, it does bring 2019's total for that week much closer to what we saw in 2020. 2 weeks ago, last week of 2020 was much slower. That fell over the Christmas holiday, so it makes sense. We got down to 124 transactions and $240 million in dollar volume. What's interesting, though, is that it's actually slightly above that same week in 2019. Interesting that the $5 to $10 million category seem to be much more active in the last week of 2020 versus the last week of 2019. There were quite a few new development trades that fell into that $5 to $10 million category this time as well. We'll get into that a little bit more later, but it's got to be negotiability on part of those new development projects that were driving some of those trades. And then this past week, the first week of 2021, really kind of amazing what happened. $357 million in dollar volume, which when you compare it to the first week of 2020, which was 169 million, it's more than double. So really just incredible to see that. The first week of 2020, the most expensive trade was 10 million. First week of 2021, we had one $10 million trade. And in addition to that, there were 4 over 15 million. So again, we're seeing the high end of the market, really drive things. Look, it's only 1 week's worth of data. We can't make too much of it, but either way, a great way to start 2021.
Absolutely. So the Manhattan high-end transactions, which have dominated the market in the past few months, have continued their strong momentum past these past few weeks. We're seeing it mostly with large homes and penthouses and new development projects, as well as townhouses. The New York Times published an article last week stating that demand for roomier homes in general has been on a rise. It then goes on to list a number of impressive high-end transactions, among them the big closings at 90 Morton Street, which is our project, and various other townhouses. I think we all read the auction report religiously. I know I do, and we're aware of the consistent activity at the high end. But this activity, which is mostly limited to specific geographic submarkets, is it really an indication of the overall health and stability of the residential market?
Right. So that's the thing, right? You hit the nail on the head in terms of it being specific to certain markets. And because of that, it's really not a trend, for the overall city. The New York Times, I think they did get it right when they talked about, increased demand for roomier homes. But what's missing is that it's increased demand in very specific locations. There are plenty of roomy, large homes on the market all over the city, but where we're seeing them trade are in very specific neighborhoods like the West Village. So definitely not a larger trend. It's really specific to certain locations.
Right. So let's get into the nitty-gritty of some of these numbers for the geeks among us. It's still 90% of all transactions that we're seeing are still under $3 million. And this has been sort of consistent in the past few months. 75% of all transactions are under $2 million. And approximately 45% of all transactions in the past 3 weeks have been under $1 million. In terms of co-ops and condos, we've seen about 60% of all transactions are in co-ops, about 35% in condos, about 2% are in townhouses. Now, again, this has been sort of consistent with the past few months. And interesting to note is that only 5% of all resale transactions in the past 3 weeks, only 5% of all resale transactions have been over $5 million, while over 50% of all deals in new developments have been over $5 million. That to me is a very, very interesting data point. While the new development transactions are the talk of the town and a very sexy topic, they only represent about 7% of all transactions. So that's, again, a very interesting point. While the sub $3 million resale co-op and condo market sector may not be, again, a sexy discussion topic as new developments and high-end sales, that is really what the bulk and meat of the market is. Tijo, how's the sub $3 million market sector compare with 2019 in terms of sales volume?
Yeah, so it's actually kind of remarkable. If you talk about this 3 week stretch between the end of the year and the beginning of the new year, 2020 into 2021 is actually doing better than 2019 into 2020. 2019 into 2020, there were about $400 million in total volume of trades under 3 million. That same time period, this year for under 3 million, it was over 500 million. So really amazing to see that growth there. We talked about this on our last talk. I'm sure, interest rates have something to do with that, but there's definitely more negotiability going on as well. It's interesting that in that 3 week stretch this year versus last year, there are about 25 to 30% more new development trades in there. So I can only imagine that there's a lot of negotiability that was driving that.
Yeah. This past week, we also saw a very interesting, very impressive surge of townhouse sales. Something that we really haven't seen in a long time. Any comments on that?
Yeah, I mean, look, for the last couple of years, at least in certain markets, certain submarkets, like townhouses have been a little slow. But I would say that after COVID, that trend has really reversed course. At least in certain locations. We have seen some big townhouse trades uptown, but the majority of them have been concentrated in West Village and Greenwich Village. And if you look at, those neighborhoods, call it March to the end of the year 2019, there were 5 trades for townhouses in excess of $15 million. If you look at March 2020 to the end of 2020, there were 10 trades for townhouses in those markets over $15 million. So really interesting to see that growth there. COVID has got to be fueling this, at least in part. We all hear about the increased demand that's going to be out there for less density and the opportunity to kind of control your own environment. And that's exactly what a townhouse in the West Village gives you. So to see this kind of theory translated into the data is really interesting. And I think it's a trend that we're going to see, continuing into the near future.
Yeah, I agree. In the same article, the New York Times article that I just mentioned a few minutes ago, Hall Wilkie of Brown Harris Stevens was also interviewed, and he was quoted by the New York Times about the sales of all these townhouses. And I quote, he said, "You get to control your own environment. There are no shared lobbies, and you get outdoor space." I think he kind of summarizes everything you just said as well, and the demand for townhouses. And I agree. I think that that trend is going to continue. But interestingly enough, this is sort of a reversing trend from what we saw a few months ago, at least, I think, in the past year. I know that at 90 Morton, which is the project in the West Village, I saw many buyers who own townhouses and brownstones that were really sick of living in a vertical lifestyle that had maintenance that just never ended, and that with no amenities. And we did get a lot of demand from those buyers who wanted to move to a full service building with large spaces. So it's interesting to see now a reverse trend back to townhouses and brownstones. Let's talk about inventory. For the first time since, I think it was the second week of August, we now have fewer than 9,000 units on the market. 8,821 total active listings as of yesterday, which represents about 12% increase over December of 2019, where we had about 7,300 units on the market. This is also an increase right now. The 8821 is an increase of 30% from May of this year, when there were about 6,100 units on the market. What are your thoughts about this inventory data and the direction into 2021?
Yeah, so it's positive, right? I mean, on our last talk, we touched on this as well. And I think we talked about the fact that for the first time in several months, there were fewer than 10,000 units on the open market. Now, just a few weeks after that, we're seeing for the first time in several months, fewer than 9,000 units on the open market. So we're definitely headed in the right direction. Look, it does make sense that there's going to be less and less on the market at this time of year. You know, historically, that's always been the case during the winter months. I do expect that to kind of slowly continue to go down, but we could also see a spike in the spring. So, you know, the question is really how much can be absorbed between now and then?
Yeah, I completely agree. I think resale owners probably were holding off on putting their property on the market in December. And there are certainly some projects out there, new development projects that delayed their launch into 2021 that probably will come to market at some point in the next few months. So it'll be interesting to see the balance between the absorption that we're seeing right now and the inventory that's going to enter the market in 2021. Let's talk about some notable deals. Let's start with the Upper East Side. And let's start with the biggest new deal from last week, which was the Penthouse at 20 East End Avenue. That was listed at $35 million, 6,000 square feet, comes out to approximately $5,800 a foot. That is a huge transaction to end the year with. And big congratulations and a shout out to the developer, Ed Baquero of Corrigan. I had the pleasure of working with Ed on a very successful project on the West Side called Element. He is truly one of the best in the business, in my opinion. Very smart and experienced developer with a keen eye for detail and a true gentleman. So congratulations all around there for that transaction. TJ, 20 East End Avenue has done a few interesting deals in the past few months. What are your thoughts about the timing of this deal within the context of the location and COVID-19?
Yeah, so it's interesting, you know, I mean, look, this Penthouse has basically been on the market for 6 years, right? The project launched sales in January of 2015. So the question is why now, right? We did talk about, you know, some of the trades along Madison Avenue, the big trades that happened, you know, over the last few months. So this definitely is, you know, another iteration of that. But still, again, this project has been on the market for 6 years, right? So why now? It's interesting, right? If you do look around, there's really nothing else like this, you know, in terms of new product that's ready to be moved into immediately. It's a spectacular unit. There's like, I think 4,500 square feet of outdoor space, but I have an interesting theory about why this could have happened now. We actually saw this at our 90 Morton Street project. We had someone, I think, who came in and talked about how they liked the fact that we were right next to the West Side Highway, or not right next, but close to the West Side Highway, because they wanted the ability to be able to escape the city in a moment's notice if need be. And I wonder if that could have contributed to this buyer's mindset of this penthouse here. You know, I think it's weird because one of the things that has possibly held back some projects along East End, the few that there are, is that it's just so far east. You know, it's far from subways. It just, as beautiful a stretch as it is, it just doesn't work for a lot of people. But the flip side to that is that you're right next to the FDR. And you can, you know, get in and out of the city very easily and very quickly, especially from this project. They've got parking, they've got the port co-share. So I wonder if that, you know, went into the mindset of this buyer. Like I said, you know, an amazing unit, but also the opportunity to leave the city, you know, at a moment's notice if need be.
That's an interesting perspective, and it would be interesting to see what happens to this whole corridor of East End Avenue, York Avenue, First, Second, and Third Avenue, with, you know, with the pipeline of projects that are coming in, and it would be interesting to gauge the absorption there. What are your thoughts about what do you think this does to 40 East End Avenue? What's the impact on 40 East End Avenue with such a big sale next door, which I believe is the biggest sale on East End Avenue, right, to date?
Yeah, right. That's what I heard. The biggest in history, right? So look, this has got to do nothing but help 40. You know, 40's been a little slow. Fortunately for 20, you know, they came on the market several years before 40, and they were hot out of the gate, but then they kind of plateaued, and 40 has really been kind of slow since they launched sales. Again, because I think East End, as beautiful as it is, it only works for so many people. But maybe if there's something to this whole theory about being close to the highway and being able to easily get out of the city if you need be, maybe that could also benefit 40, and time will tell.
Yeah. All right, let's jump to the West Village that's been on fire in the past few months. At 90 Morton alone, we had 4 big closings in December, with most of these deals actually done during COVID. Now, there were definitely discounts applied, but still the price per square foot and the price points of these transactions are very impressive in today's market. We're continuing to see strong demand and momentum in the West Village. You expect this trend to continue? And let me ask you something else as well. Do you think that the West Village is actually insulated from challenging market conditions that affect other parts of the city?
So yes and yes. I do see this trend continuing. I mean, it's not just because we have a project in the West Village, but I really do believe that. And I see it continuing because I do believe that in a unique way, the West Village is insulated from market conditions in a way that maybe no other neighborhood in Manhattan is. You know, I mean, look, to begin with, it's a geographically small footprint, and a lot of it's landmarked, right? So historically, it's been very supply constrained. So it already had that going for it. And then it has some other attributes that in an interesting way kind of check off some of the COVID boxes, if you will, right? It's low density. And because of all the constraints around, you know, adding new supply there, when you do see new product, it tends to be either townhouses or smaller, more boutique buildings. Which, you know, obviously have an appeal in the post-COVID world. And look, the proof is in the pudding, right? Look, last week alone, there were 2 transactions for townhouses in the West Village in excess of $16 million. And then the big one has to be Barry Sternlicht's reported resale of his unit at 150 Charles. Now, granted, look, 150 Charles is a bigger project, but it's still a very special project, and it's in the West Village. And you got to really look at, you know, what he bought that for versus now to really understand what I'm saying. So when he bought that apartment, that was at arguably the very height of the last cycle, early 2013. And when he bought it for, I think, a little over $34 million or around $6,000 a foot. Now, in the midst of COVID, he's apparently getting a premium on that. Is it reportedly in contract for $40 million or $7,000 a square foot? So if that sale ends up going through even close to that number, I think it just reinforces everything we're talking about how special the West Village is and how, you know, insulated it is from recessions. And because of all that, you know, I see this trend continuing into the future.
Yeah, I agree about the West Village, but it's interesting to compare that transaction and transactions like it to the one on East End Avenue. I mean, you cannot ignore the fact that it's 2 different locations, different completely parts of the city. But I would venture to say that the buyer, I don't know who the buyer is for the $40 million in the West Village, and I don't know who the buyer is for 20 East End Avenue, but I do see the similarity in terms of buyer demographics throughout the city for very, very special properties, large spaces, private, boutique, very high end. And I think that that's the buyer out there right now that's playing hard. People that have not been affected negatively by COVID financially, and in fact, are flush with money and capital, and probably did very, very well in the past few months. Wall Street has been very kind to many people, and now are probably getting good deals, purchasing and getting good deals. And they do have commitment in the city, for the city, and they're doubling down, which is great to see. Soho, we saw a couple of interesting transactions in Soho, 102 Prince Street and 95 Green. Any comments on those?
Yeah, I mean, first of all, let me just say, really good to see these trades in Soho. Soho's been really quiet for a while. I mean, look, I spent some time walking through Soho in the height of the lockdown, and it was a ghost town. It was kind of sad to see. So to see some momentum start to pick up in the neighborhood is really positive. We did actually see a few weeks ago, before the 3 weeks in question here, we saw a trade at 49 Green Street, which is a new development project with only a few very large units. I think the unit that they just put in contract was about $9.5 million. And now you're seeing, 102 Prince at almost 20 million. And then another big trade that you just alluded to at 95 Green Street. 102 Prince is very unique. It's the first time I think it's been on the market in 30 years. So it's a Soho loft in the true sense of the word. And, there's gotta be obviously that a person out there that just is dying to jump into that opportunity. And so I'm sure that's what's behind that trade. 95 Green, that may have been more of a bargain hunter. I mean, $1,600 a foot for that unique of a space on such an incredible block. Which, by the way, even if it trades at the current ask, it's still like a 10% loss versus the 2018 sale. That may have been more of a bargain hunter there. But either way, it's a big price point in a neighborhood that really needs it. So very, very happy to see that happening in Soho.
Yeah, I hear you. I remember Soho from I think it was June, July, when everything was shut down and boarded up, and it was just sad. It was a sad feeling, and that's what I think the perception of what was happening possibly drove a lot of people out, and it made headlines in places outside New York as well, and people called the city all kind of names, and to see these transactions in that neighborhood now, regardless of the price per square foot, for that price point, as an investment in a neighborhood in downtown, and as a commitment by affluent buyers in New York, the trust in New York is just incredible to see, and it's really encouraging. Nomad, our building on 31st Street at Nomad is continuing to be very busy. We dropped prices recently. It's a brand new project, and we're flush with inquiries and appointments on a daily basis. Even during the holiday in the past 3 weeks, we just had back-to-back appointments, and we're doing some very big transactions there, which is really good to see. Tell me, other notable new development deals in the past 3 weeks. Any out there that really we should highlight?
Yeah, there's a few, and what's interesting, something that they all share is that they've all been in projects that have been slower over the last couple of years. Within the last 3 weeks alone, we saw 2 trades at Woolworth on Park Place. We saw 2 trades at Jardine in West Chelsea, and we saw 2 trades at 30 Warren in Tribeca. Why all of a sudden are these projects that have been a little slower more recently doing deals? I mean, it's got to be, negotiability on the part of the sponsor. Maybe there was a rush on both the buyer and sponsor's part to maybe get a deal done before the end of the year, maybe for tax purposes, who knows? But for whatever the reason is, great to see some of these projects start to do sales for the first time in a while.
Absolutely. I think there was also a transaction in the cast iron house, right? And we haven't seen anything there in a while. Yeah, I think negotiability is probably a big factor here. Also, mortgage rates are very, very attractive. Most of these buildings are ready to be occupied now. There's no lag time or wait time for buyers that can take advantage of very strong mortgage rates. And I think overall, people are really looking at the future, looking at New York. And I think there's definitely more of a level of confidence in terms of purchasing, and the proof is in the pudding. Okay, cool. I'd like to, let me just give you my take on what I'm seeing. The stock market has been doing very well. The high-end condo and townhouse residential market continues to thrive. and affluent buyers are certainly exhibiting a strong commitment to New York City. However, not all is milk and honey in a land of New York City real estate. All around us, whether we see it, acknowledge it, or know it, all around us, the commercial real estate market is going through a meltdown. The hotel industry, retail, commercial and office buildings, multifamily, we're starting to see some major portfolio defaults and probably just the tip of the iceberg. New York City's financial deficit and upcoming local government elections will also have a very strong impact on our business. There's a lot of pain out there, and we all must be conscious of that and its impact it will have on our business, because it is certainly coming. For us brokers also, I think that at times we experience the market in a vacuum. What's important to us is to normally sell our listings and sell our buyers. We point to media headlines and reports about big sales as an indication of market health, as well as indication of business is great. But that is very skewed and could be very deceiving, and we should be careful of that. It may be true for a select group of brokers with the right buyer profile and network and high-end listings in specific submarkets. I know I've spoken to many brokers who are doing very big deals now, and for many of them, this is the best year that they've ever had. This is within the context of COVID-19, 2020. It's not necessarily the case for most brokers, some of whom are experiencing the worst years that they've ever had in the business. So just something that we should all be conscious of. This pretty much does it for us. Thank you very much for joining us today for Reuveni Reel Talk. I hope you found our discussion informative. We welcome your input, your suggestions, questions, and comments. Please subscribe to our weekly In Real Time report and follow us on social media. Our next In Real Time report will come out on January 11th, and our next Real Talk video discussion, like the one we did here today, will take place on January 20th. Until then, I'm wishing you happy selling and stay safe. Thank you so much.